All right, it's a seesaw between one positive and one negative trigger for the market. Which one will overtake which? Anuj joins in to give us a quick trade setup. Anuj, what are you going with this morning?
You know, Sonia, the good thing about, or perhaps the bad thing about market is that this is one place where you have better visibility of long term than short term. And if you ask me where the Nifty would be in 20 years, I would stick my neck out and say perhaps close to 4 lakhs. But where would it be in 20 days? Nobody would know. But you know, today's big news, of course, you've already discussed, so I don't want to get too much into that. But is this bond inclusion? It's obviously a long-term positive, this inclusion. But the market had been factoring this in for some time. Remember talking to Lata also about it. The bond and currency market had been signaling that something like this was in the offing. So perhaps in the near term, the news is in the price, but this, remember, is a long-term positive. If you start to see, the kind of money flow that we're talking about, billions of dollars every month, starting June 2024, and of course, there will be more of this over the next few months. So in that sense, it's a long-term positive, and you want to focus on banks, you want to focus on, in turn, the domestic cyclicals, basically anything related to Indian economy from a portfolio point of view. But in the near term, how much of it is in the price, I think let the ticker tell us, and then we'll know. Also keep in mind, we are not alone. Right now, the global market is going through some kind of a reset. What's that reset? That reset is higher for longer in terms of the Fed rates. And I think that's something which is also having an impact on the asset classes. And you're seeing the kind of FI selling over the last few days. In terms of Nifty and Bank Nifty, the price action has been very disappointing over the last couple of days. The Nifty closed below the 20-day exponential moving average, and the Bank Nifty below the 20 and 50-day exponential moving average. And not just that they closed below that, there was no effort to defend these levels over the last couple of days. There's been brutal selling over the last couple of days in large caps, especially big banks. I'll give you an example. HDFC Bank has seen delivery selling of 9,000 crores in 2 days. ICICI Bank yesterday saw delivery selling of 1,000 crores, and it broke below the 20 and 50-day exponential moving average. Even the mid-cap index is showing second sign of, second round of cool off. The texture is a bit of a sell-on rally till 19,800 is reclaimed. But as I said, the news, of course, is long-term positive. It's just that how many of us focus on long-term? That's the big question.
Well, but to begin with, the GIFT Nifty's cut has trimmed a bit. When we started the show, the GIFT Nifty was down, I think, close to about 100 points. Now let's pull that up. I think it's, it's cut its losses to some extent. But good time then. There you have it. 55 points is the implied opening. Lower. Mitesh